Joining us right now, Federated Investors Chief Equity Market Strategist Phil Orlando. Phil, good to see you.
Good morning.
Thanks for joining us. The impact on these tariffs.
I think the impact is going to be de minimis because I don't think the tariffs are actually going to go into effect.
Okay.
Our view is that this is a negotiating ploy. That is, Trump and his administration has looked at the trend in trade in the U.S. over the period since he's been president. Net trade surged to a 10-year high of $57.5 billion in the month of February, up 30% just since last summer. And that's had a deleterious impact on economic growth. You look at the fourth quarter GDP, net trade took literally 1 percentage point away from GDP. A 2.9% GDP would have been a 4% GDP had trade been neutral. That's what's caught the Trump administration's attention. What's been going on now, I think, is an effort to focus on the countries that matter, the NAFTA countries, China, Germany, Japan, and try to dial that back. We've actually started to see some progress. The net trade number in the month of March dropped down to $49 billion. Now, it's only 1 month's data. We need to see if that trend continues. But if that trend does continue into the second quarter, we're going to, and we saw this in the first quarter, trade was essentially neutral in first quarter GDP. If that continues over the course of the year, we could be talking about 3 or 4% GDP growth, not 2 or 3% GDP growth. And that's significant. I think that's ultimately where they're trying to get.
And it feels like the markets agree with you. We got a rally this morning for the major indices. Despite these tariffs, maybe this is the Trump administration negotiating. Kevin, what do you think?
Yeah, I think actually the markets are reacting, and I think Phil will agree on this, to actually the rebound in the consumer. And you talk about a strong retail rebound in April, right? Despite the weather. And I think that's going to go into today's jobs numbers. We're going to see healthy jobs numbers in the service sector, right? I mean, we're a 70% service economy. I look at the retail real estate sector. That's up 5% for the month, 1.5% for the week. So it's showing that the consumer's out there. They're out spending money, and retail's not left for dead, and that's good for the economy. What are you seeing on according to your note, the April retail sales rebound? So
the consumer, having done very, very well at Christmas, specifically November, was dead in December and January and February. The personal savings rate had dropped to a 10-year low.
Yeah.
People stopped spending. But that changed. As Kevin mentioned, the numbers in March and April were terrific. We just had the best April retail sales in 6 years, and we think that trend has legs over the summer. Not only the consumer, but manufacturing data has now perked up. Yesterday, we got the Chicago Purchasing Manager number. All of the regional regionals that we look at, Empire, Philly Fed, Kansas City, et cetera, all of them have gone vertical over the course of the month of April. So manufacturing is coming back. The consumer is coming back. So we think that GDP in the second quarter is probably going to look like 3.5%, give or take, compared to, sort of a low to mid 2 that we saw in the first quarter.
Second quarter. Jagan.
I know the consumer did look really good for the month of April, but I will point this out in terms of these are my words, the half-baked, erratic, and arbitrary trade policy that's been thrown out since earlier this year. And with these tariffs and with the threat of retaliation among our most important allies in this world, you are creating a completely unpredictable playing field for business. And for years and years and years, it was President Obama regulating industry in this country by fiat, and businesses, whether it was Obamacare, whether it was through executive orders, they had trouble making decisions. And you have people within the Trump administration doing exactly the same thing to businesses in this country. How do you deal with what aluminum prices this year are up? Steel prices are up 40% this year, nearly 50% for aluminum. How do you deal with that if you're a business? One, if you say, oh, well, these tariffs aren't going to go into effect, well, where does that leave business? How do you decide, are you going to cut workers? Are you going to cut wages? Are you going to raise prices? It is creating a third term for the Obama administration in the way that they're handling businesses in this country.
I don't disagree with that sentiment, and I think what we've got going on here is sort of a good cop, bad cop thing. You've got Trump, who's being the bad cop, rattling the status quo. And behind the scenes, quietly, I think you've got Kudlow and Mnuchin, who are trying to set a more rational policy.
Right.
All of this is going to take place and be consummated, I think, in relatively short order. This is not something that, in our view, is going to drag on for years. It's going to be wrapped up within a couple of months. Notice the China situation. I think that you've got a $375 billion surplus in manufactured goods, China versus the U.S. Behind the scenes, what we're hearing is that they're willing to cut that number back maybe by $150 to $200 billion.
My issue is we sit here and talk about numbers, and we throw out analysis, whether it is a right-wing group or a left-wing group who's doing analysis on the impact. But if you listen to soybean farmers, China can immediately, and you already saw that, just cut off buying soybeans from U.S. producers. If you look from the Federal Reserve, there was a maker of tractor trailers saying, I can't raise prices as fast as my material costs are going up. If you pick up the phone and talk to business, and we say this is the business president, businesses are rattled by this.
Yeah, but one of the issues is this national security thing as it relates to China. When you're talking about the theft of intellectual property and the forced transfer of technology, which are the two biggest issues in terms of China, not the numbers, not the $200 billion that they're going to buy more stuff at. It's really, and he's got to do something to get them to make a change here. They won't even admit that they steal intellectual property. How do you change that when they won't even admit it?
But that is the kind of insanity of what has happened in the last couple of days, is that rather than saying China's our #1 target, is an enemy on this, we're going to use the power of all our allies together. Instead, we've picked a fight with people who could help us battle China and use the national security argument on steel and aluminum, which is spurious, and it's even worse and more idiotic when you look at automobiles. We're staring at the potential for a 25% tariff on automobiles.
And I think, to your point, Dagan, when it comes back to the businesses, that's the part that hopefully this doesn't drag out too long, right? And hopefully this is a negotiation, because we need to give, consumer confidence is at an all-time high. We need businesses to have the confidence,
and so far they have. They've started spending money again after, as Dagan said earlier, they were sitting on cash under the, the weight of the Obama regulatory machine.